I get asked all the time to do videos on AI stocks, on the best AI stock to be buying in the stock market. And I'm not the biggest AI expert on YouTube. That's why I haven't been doing much about AI. And a lot of the AI stuff is still unprofitable, to be honest. Very few companies are making some profits with it today. But I did do a lot of research. I compared many different companies, Palantir and others, based on valuations. And I did come up with the best AI stock to buy in today's market that's trading somewhere close to fairly valued, even though I believe the market is overvalued in general and most stocks are expensive. But amongst AI stocks, I believe this is the best fairly valued one in this market. And a lot of you know it. A lot of you have been buying the dip on the stock. And this stock is Microsoft. And I'm going to tell you why I don't believe Microsoft is as overvalued as a lot of people believe just because of a high PE ratio. And I'm going to give you my upside potential and all that stuff. Microsoft has been going down recently. It's down around 11% from all-time high. Not the biggest dip ever, but the dip keeps getting bought with stocks like Microsoft because they have massive potential. And it's an amazing company in general. This is an amazing graph that would show you how Microsoft makes its money and how efficient the company is, how much goes into gross profits and operating net income, and how much goes in cost of revenue. It's pretty much nothing. And they have very high margin, over 70% margin. Just absolutely insane. And most of their revenue comes from Microsoft Azure, of course. Then you have Office, Windows, Gaming, which is Xbox, LinkedIn, which surprised me. I didn't know LinkedIn makes 4.3 billion. And then you have Search, which is Bing, 3.2, and other kind of services. They make $4.8 billion from them. An amazing business model. You have Microsoft that's catching up on Azure in terms of the cloud. It's catching up to Amazon Web Services. As you could see, AWS, which is a stock that I like very much, Amazon, they've been somewhat struggling. They've been somewhat declining in terms of market share. They recently gained a little bit, but they've been declining. Now look at Microsoft. It went from 15% in Q4 of 2018 to pretty close to 25% market share. So it's rapidly catching up to Amazon Web Services, and now it's the second largest cloud provider in terms of a market share. And it's pretty amazing, and it's rapidly growing, rapidly catching up, and will be interesting to see what happens in terms of an operating system for desktop. It's still a 73% market share for Windows, which is owned by Microsoft. It's just an amazing business model, wide moat company, amazing stuff. And the company is spending more than anyone pretty much on AI. Even Amazon, which I like, is spending on AI a lot. But Microsoft is spending $44 billion over the last 12 months on capital expenditures. And a lot of it is and will be going into AI. For example, the company invested $3.3 billion for cloud infrastructure and AI stuff in Wisconsin. And then they built the first data center in Mexico, another $1 billion data center in Kenya, and another $4 billion in France. I mean, this is absolutely insane. This company is unstoppable. They're spending a lot on AI, a lot on data centers. And even though it's not paying off in the near term, I just don't believe that Microsoft is so dumb to be doing such things if yet they don't know that this will eventually be something big in the future. And they have a very smart CEO, and he's been doing amazing things. And Microsoft has always been a long-term thinker in terms of a lot of their investment. So I would highly doubt they would put all this money for nothing, even though it's not really delivering in the near term. But we're going to find out very soon. And then they also put a $2.9 billion in Japan and another $3.1 billion in the UK. But you don't only have Microsoft building all those data centers, you also have their stake in OpenAI, which recently got valued at $157 billion as of the latest offering. And Nvidia did join in on a stake in OpenAI, I believe. And it's amazing, $157 billion for OpenAI, over 250 million weekly active users on ChatGPT. A lot of people are telling me they're not using Google much anymore. They're putting up their research and everything on OpenAI, ChatGPT, whatever you want to call it. And the company can afford to do all those things. They still have $75.5 billion in cash and cash equivalent. resilient free cash flow. They do have some debt. Long-term debt is like 42 billion and other long-term liability is 27. Even the total cash covers them and they could always refinance to that. They could take on a little bit more. It's a good balance sheet, $75 billion of cash, and they can afford to make a lot of those investments and many more investments in my opinion. Now, if we looked at Microsoft, and I'm going to tell you about the valuation, but we did look at an amazing company that's well established in many different growth industries. And this is a company with over 29 or 30% return on capital. Massive. This is a company with 36% net income margins. Not a lot of companies are this efficient to put up 36% net income margins, and stock-based compensation isn't as bad with Microsoft as it is with other kind of big companies or tech companies, as you want to say. So 36% net income margin is amazing with massive return on capital, and the company is still growing around 16%. And 15% is likely expected to grow 15, 16%. So 15, 16% growth with 36% net income margin and massive return on capital and an amazing balance sheet and a wide moat company. You're getting all that stuff for around 30 times earnings. Now, for me personally, 30 times earnings for Microsoft, for the moat, for all that stuff, isn't really expensive at all, especially in this market when you compare it to other opportunities. I would love to buy Microsoft at 25 times earnings. I think this is a safe spot, the margin of safety spot. This is a sweet spot. But even here at 30 times earnings or 31 times earnings, this is pretty much the 3-year average. The 3-year average for the stock is like 30 times. And now it's sitting at 31 times, and you have the AI momentum and a lot of their investments that have been delivering, and they will deliver massive profitability over the long term. So just looking at that stuff, 30 times earnings, it sounds expensive, but for a company like Microsoft in this market, I don't believe it's extremely overvalued. I think it's close to fairly valued, and I would much prefer, of course, to buy it around 25 times earnings. But this is my valuation model based on 30 times. I took in 15% revenue growth over the next 5 years. And this is what the analysts have between 15 and 14%. I think 15% is highly achievable for Microsoft. I put in the same net income margin of 36%, even though it could have ended up being a little bit higher if the AI stuff become massively profitable. It could be 38, could be 40%. But I kept it at 36%. PE ratio is 31 times. I put it at 30 times, assuming almost the same multiple, no multiple contraction. With this scenario, and around a 2% shareholder yield, which is some buybacks and dividends, the amount around 2%. In total, I'm seeing 87% on the upside, or 14.2% CAGR over the next 5 years with a very wide moat company, mega cap company like Microsoft. I don't think this is a bad return at all. So that's why I believe Microsoft is fairly valued, and it's one of the best valued AI stocks in this market. Now, you do have the risk of a potential multiple contraction, meaning if Microsoft trades at around 27 times, let's say, 5 years from now, then your return would only be 70%, which is still not bad over the next 5 years with a wide company, amazing, big, huge company like Microsoft, or 11.8% CAGR. I don't think this is bad at all. But for me personally, if I had to buy Microsoft with some kind of margin of safety, I would wait for 350s, 370s. As here it says my price to get it double or 15% a year is 343, but I would wait for 350, 370. I think this is a sweet spot. I'm not sure if this is going to happen, but if I had to buy an AI stock in this market today, and I'm looking for something that's trading as close to fair value as possible, I would be buying Microsoft, a small position, and dollar cost averaging down, because I don't believe Microsoft is extremely overvalued, but it's not cheap either. I think it's close to fairly valued, so it would only be a small position, and I would dollar cost average down. If the stock goes lower, you could always buy more. That's what I always say. And that's just my opinion on Microsoft. It's not financial advice. Thank you for watching the video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.